Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we saw the markets lift up higher again. We were going to analyze those levels on the SPX here in a little bit, but also keep in mind, tomorrow morning, we've got PPI month-over-month data going to be released at 8:30 in the morning prior to the market opening. So that could provide some volatility going into tomorrow's trading action. So let's check out the market summary board and see what happened today. We can see the Dow Jones is up 1.1%, NASDAQ up 0.04%, S&P 500 up 0.34%, U.S. oil falling down roughly about 0.5%, gold up 0.3%, and Bitcoin ripping through 120,000 on the chart. Potential breakout scenario for Bitcoin. We'll check it out. Take a look at that chart here also in just a few moments. First up, the S&P 500 heat map. See here, NVIDIA under a little bit of pressure today. Although we've had a nice lift in the market, some of the big high flyers are starting to get hit. Profit taking starting to come in. Meta down 1.24%, Microsoft down 1.78%, Google down 0.67%. Apple really kind of lifting the big boys up, making sure the S&P 500 stays afloat in green for the day. Now Apple's up 1.61% for the day, but AVGO down 1.24%. Some of the big high flyers, Netflix, Oracle, Palantir, all red on the day. Aside from that, a lot of green. You can see that. A lot of big moves or decent moves for other stocks. This could be telling us that there's some money rotation going on. We've highlighted we're at the high ends of the S&P 500, and big boys are starting to take a hit, yet the S&P 500 isn't really faltering too much as of now. That tells me investors are taking profits out of these high flyers and redistributing that capital into other stocks that haven't really picked up steam. All right, into the S&P 500 that we go, the SPX daily chart. You can see here, I've highlighted yesterday that we've got two parallel channels really giving us insight as to where price action could go in the near term. So let's rewind the clock and also show you both of those parallels. This larger parallel, and here I'll delete this one on top. This larger parallel that you see contains price for most of the price action here on the chart. But we've since now started to poke above. So tomorrow, will we confirm above? Will we move above on the chart and get a close above today's high candle? But notice with this other parallel, this basically was the bookend scenario for where price action was today on the S&P 500. We pierced the top end parallel, came down, tagged the support on the bottom portion of the parallel, and price is now just kind of stuck in between like a no man's land. Well, we need to have a bullish scenario and a move higher on the S&P 500. We need to get a close above this candle tomorrow. The high that we'll be watching, 64.80 and 28 cents. Critical for tomorrow's bulls to keep this rally going. Next up, the QQQ. QQQ did push higher also today, and it looks like, too, we got about a minute, 23 seconds left. The high on this candle we need to eclipse today is 580.35 cents. We're above that by 20 cents roughly right now. We'll see at the last minute if price action will remain above there. If that happens, that makes this inclining trend line now support, and then would open the door for a possibility of the Qs to go just a little bit higher at 592, even with some of the big high flyer tech stocks now starting to look like they're going to take profit. The Q chart at least is saying there could be a potential chance for slightly more upside. And when we get so close to these psychological numbers, 600 on the QQQ, if we do push up and tag that inclining trend line, I would then go to say the likelihood is we still will push up to that $600 level. So really, today's close and tomorrow's price action is very important on the Qs for its upward or downward movement. Next up, the SMH. Look at this, guys. We are closing above yesterday's breakout candle. So that now gets us comfortably inside this inclining parallel channel. Now flipping this bottom side to support. That support is roughly at $296 on the SMH. Also notice I did find another trend line for us to target for this near-term move up. So say we continue moving up tomorrow and even the next day, resistance will be right here at 308. And then that could provide some pullback opportunity to that new support level on the bottom end of this parallel channel. Next up, IWM. Look at this incredible move on the IWM. Another inflow of capital, back-to-back days. Today, 1.96% moving up on the charts. This does also, again, guys, kind of confirms what I just mentioned a moment ago on the S&P 500 heat map. We've got high flyers starting to get hit, small cap stocks starting to rip higher. That tells me, again, money rotation is going on in the stock market, clearly seen right here on the IWM. All right, so back to full screen. Here we go. This resistance area at 229.30. We'll zoom into the 10-minute chart. You can see what happened today. Price action gapped higher. We got right up to this resistance area, pulled back, made another attempt, now hitting that resistance area, finally broke through. And then you can see after that point that was the major resistance, and price just moved higher on the chart. So this resistance has now been beaten. The next area on the chart for resistance is at 236.63. Should we continue up in the next day or two, that would be solid resistance, especially with this extended nature on the chart there for IWM. Next up, Bitcoin. As we see here, Bitcoin now finally breaking above this inclining parallel channel. What do we know about breakouts? Well, we need a confirming move to back up that breakout to make sure that this isn't just simply a bull trap scenario right here on top of the charts. So great move nonetheless for Bitcoin. Bitcoin now at 122,766. The top end of this parallel, which we're going to be watching closely over the coming days of trading, is at 121,277. If we do break down underneath there, then the target is going to be this declining trend line that you see here on the chart, currently at $115,000 for Bitcoin. Next up, gold. Gold really hasn't done too much the last 2 days, starting to just consolidate after this big red candle down. This is bearish consolidation for the near term. If this does play out, that would pull price right back down here to the bottom end of this inclining trend line, right around 22.96 on the charts. However, gold is holding up pretty well in this current market conditions. A lot of investors are still attracted to gold. Speaking of attraction, a lot of investors are also attracted to silver. Look at this rip higher. This red candle now has been overcome with price action today. Nice recovery from that big red sell candle that we saw. I thought we were going to go and retest this 36.58, but not so fast. Silver still has some strength. If this continues, this inclining trend line will be the next area of resistance, roughly about $39.75. But ultimately, this main target, 41.66, is a very strong potential target for silver. Should we move up, hit this resistance, start forming a bull flag, and then poking through to hit that resistance? A lot of demand for silver, especially with its industrial side component and all of the computer chips being built all over the world. Next up, we've got U.S. oil. U.S. oil, you see here, it did also drop down in price today. Got support from this declining trend line. We've had this on the chart now for months now, guys. We've been watching this declining trend line, how price reacted to it here when we had the inverse head and shoulders pattern that played out. And now we have price coming full circle right back down to this declining trend line. And look, the trend line still works, guys. That's the amazing thing about these quote unquote magical lines, is they can work over and over and over and over again, as long as you know how to draw them on the charts. Still, this is all a bearish consolidation pattern with a break here, near-term support for a potential bounce up. Maybe we get as high as retesting this low pivot here at 64.07. However, my target still on U.S. oil is going to be this declining trend line right around $59 on the chart. Next up, nat gas. Nat gas did have a nice little small bounce recovery day, basically testing the bottom side of this declining trend line that it broke through yesterday. What we want to see for nat gas to move lower, we need to close beneath this red candle. That will greatly increase the probabilities that price action is going to go down here to $2.55. That's where I'm still looking for nat gas to go. Obviously, we haven't gotten back above this declining trend line. Should we do that, then the picture would change ever so slightly. But with price action down here, that's the target for nat gas. All right, next up, the 10-year yield. Look at this nice drop here on the 10-year yield today. Beautiful red candle here on the chart. But ultimately, what is this? This is a bigger red candle with bear flag consolidation. This bear flag produces a measured move down here to 4.095% on the chart for the 10-year. So this could lead to further downside on the 10-year. Pay close attention to that. That would also break this inclining trend line. Whenever these inclining trend lines on charts are broken, they typically like to go to the first support, then retrace back up to where it broke, which is on this line. So be watching this pattern to see if we can't track price action on the 10-year over the next couple weeks. Next up, CAVA. CAVA, guys, I went through this yesterday on Trading the Close. I presented some levels of support at $70 to $71.50, and CAVA just ripped right through it. It was a bad, nasty sell-off in the after hours, getting as low as $63 in pre-market trading action today. But what's really interesting is that support level was still valid as price action ran right back up to it today and actually went above it, now closing beneath that level. So let's get back into the full chart. But you can see here the wick, we got as high as $72.55. That low area, $70 to 71, was all provided by these low pivots right here on the charts. And so that tells me that two things: that area, not only was it significant, it was so significant that price had to go back up and retest it. But ultimately, right now, that is going to be a resistance area for us to get through in order for CAVA to move higher on the charts. Also, after that fall, I was researching the charts, trying to find another level on why price is going down where it is. And I did find this inclining trend line from a pivot low back in November of 2023, strung over to the very next pivot, and then everything started to make a little bit more sense. But if you look here, price action opened up underneath this trend line and still managed to push through that trend line. That shows you there's a lot of investors still interested in CAVA and are very eager to start buying when it's making new lower lows for 2025. Beautiful bounce up off of that low today here on the chart of CAVA. Should selling pressure reemerge after this great bounce, the next level of support I'm targeting is $59. So a decent pierce there of the $60 mark, but that should be great support for CAVA. Next up, we've got Instacart. It's CART, company known as Maple Bear. See this dramatic fall we had today, a gap lower and a big sell-off. Now closing the day 11.51% down on the day. And why is that? Well, Amazon announced that they are expanding their same-day delivery to over 1,000 cities. So this took a big hit and dent into the market share here for CART. So investors reacted accordingly and started selling into it. Anything that we've learned from the past, whenever Amazon has you in the crosshairs for that potential business, you better watch out. Amazon is a behemoth. It's a mammoth company, and it really has a ton of capital to put behind whatever prerogative they have. And in this case, making same-day deliveries for groceries and expanding that service, which is going to put a dent in the market share here on CART. Next area of support is going to be down here, 42.90 on this inclining parallel channel, followed by 39.80 and major support on here on this inclining trend line that you see taken back from August of 2024 down here at $38.22. Next up, Hood. Hood's finally starting to crack, as we see here. Hood has had a monumental run since the April lows, guys. You can see this run over 290%, just simply remarkable. Almost 300% run on Hood in just a few months. Now, pullbacks are needed. Pullbacks are due for Hood to continue this bullish momentum. All right. So first areas first to watch is this inclining trend line. Notice we've hit it now 3 times. So it's now vulnerable for a break. That inclining trend line, minor support area is going to be roughly right around 103.49. Should it hit tomorrow? Next levels of support are at 96.92 and 84.07. But beware, I normally don't like to buy the first level of support with this inclining trend line, as those levels typically get blown through. If you are a Hood bull, you want to wait at least till this 96, potentially even $84 to get in. And notice here, this is what's appearing to be, for now, a bull trap scenario, because this was the previous high before we had a small pullback here on Hood, and then price action pushed above, never confirmed, and then look, rejected today, back down beneath the previous all-time highs that occurred on July 18th. So be watching Hood for other signs for a potential break. Also, let's just flip to another high flyer real quick. Look at this chart of NVIDIA. Now you look back further on the chart, it's all contained really in this parallel channel, the trading action since August of 2024. And where are we now? We're at the very top end of this. Now, there's a couple things to consider. We've hit the top end here. Then we dropped down. Now we've reattacked it and hit it again. And now we're starting to put in bullish consolidation. Normally, bullish consolidation under a parallel will lead to a breakout. So right here, we're getting mixed signals. We have an extended move into the parallel. We should get a good pullback off of that, and we still haven't gotten it just yet. Matter of fact, we're getting bullish consolidation, implying another push higher. A little bit of mixed signals, but it's something to pay attention to over the coming days. What happens to NVIDIA? Do we get above this parallel? Do we start selling off? If so, first area support, which would be the third tag of this trend line, is down here just under $175 at $172.27. Next up, WBD saw a nice gain today, pushing up 7.4%, nearly coming back and recapturing nearly 50% of what dropped during the earnings that was delivered on August 7th. So we see here, though, on WBD, we have a longer-term declining trend line on the chart. Price action most recently in July pushed higher up on the charts above that declining trend line. And what happens when price action breaks out of declining trend lines? Even if you X out earnings, it normally likes to retrace to where that breakout occurred. But this is what happened. We did actually have a confirming move under this declining trend line, and then that failed. And so the resulting conclusion and move of this was just another rip higher. Whenever you have a failed move, you usually get the biggest moves to the other side. So we had a confirming move, now saying price likely is not going to get up above this declining trend line without consolidation, but not today. We ripped higher, and that likely is going to continue with this momentum. Watch 1270 as the next levels of resistance, followed by 1426. Any pullbacks down here on this declining trend line will be support at $11.30. Next up, TWLO. As you see here, TWLO is starting to also recover from its big decline after earnings. Beautiful bounce up, now up 6.8%. Next resistance to watch is $108.48, followed by $113.12, both of which are attainable to do with this dramatic fall and a rapid increased bounce that we're seeing so far. What likely could happen, we move up here to the resistance, put in some consolidation, then push higher up to this 113.12. Notice all this resistance from all of these pivots right here on the chart. People that are in this stock will likely start hitting the sell button if they've been buying and buying higher than where this area is. Now, if we have a turn down in the markets, this inclining trend line gets broken, support's down at 84.11. Another big mover in the markets today was Ethereum. Ethereum just continues to push higher. Incredible move here on Ethereum. All-time highs now aren't that far away. We're only about $140 away right now currently on the chart of Ethereum. Incredible move, breaking out of this inclining trend line. What's likely to happen too, just as we've seen on all of these charts, we've got a breakout. So what likely happens on a breakout of an inclining trend line? Price action usually comes back down to that trend line eventually, either catches support or starts going back through. Minor support right here at this trend line, 44.77. Since we're confirming this move up, it likely still will have a lot of buy the dippers on any pullback. So I would anticipate a small bounce should price come back down to this inclining trend line. Other levels of support are all listed here on Ethereum. Make sure to take a photo of that, as these levels will be great buying opportunities when and if Ethereum pulls back in on the charts. Next up, XRP is attempting to break out of this bullish consolidation pattern. Now, we didn't get a push up as high as what we just saw on Ethereum today, but it is starting to change this pattern. You notice this is a bull flag, but then now we're starting to get back up to this area, the top end, basically the pole of the bull flag, and we got rejected there today. That level is roughly $3.33. Be watching that level on XRP. If we're able to break above that level, that would then open the door for this measured move to come about from this bull flag pattern, with a target up here at $3.52. Now, if XRP does fail, and also I want to show you how great technical analysis is. We do have levels of support, as I've described. This show is like a broken record. When we break out from an area, it likes to come back and retest. That's exactly what happened. Now, this breakout from this inverse head and shoulders pattern that you see on the chart was so strong that price didn't come all the way back down to this neckline. In fact, it just came to the very next support trend line, as you see right here on the charts, and got that reflex return bounce back up on XRP. Now with bullish consolidation, still implying there's a good probability chance that XRP continues marching right up on that chart. All right, guys, that wraps up today's Trading the Close. Thank you so much for tuning in. Tomorrow, PPI data at 8:30 in the morning should give us that volatility. Until then, you guys have a great day, and I'll see you guys on the charts. Take care.